Mike, welcome to the podcast. Thank you for joining.
Thanks, Jake. Great to be here.
I'm going to get to learn so much about what you've done today that previously, actually, I hadn't talked to you about enough. So before we go there, I want to start with, we met at a Bitcoin Bush Bash and you sat next to me, you were glowing and you were just pumped about the carnivore diet. And I was like, what is this guy talking about? And it was just awesome. And a month later, you coached me through my first 30 days of carnivore, which went horribly in the end because I ended up drinking booze and got very sick. But
that's a trap.
Oh, Mike, we'll dive straight in with the carnivore side of things. Why did you go carnivore and how has it helped change your life?
Yeah, well, that's a big question because I was sort of unwell for a number of years before I found carnivore. I had I guess it started just being sort of generally tired after I ate and feeling lethargic all the time and not sleeping well. And then it sort of progressed onto waking up, in the morning with puffy eyes and feeling sort of inflamed. And it generally got worse over time. And then it sort of turned into, I've always had migraines. And so I had migraines sporadically, but I was probably getting more migraines. I then had headaches all the time. So I literally every time I ate, I had headaches. And so it sort of turned into something that was pretty overwhelming because there was, real challenges and I went and saw lots of different doctors, did lots of different tests, and there was nothing sort of definitive that they could sort of suggest was the reasoning. So I'd always had a thought process or a thinking that nutrition was super important, just because my uncle went through something sort of similar with migraines and a Chinese doctor told him to drop gluten and that changed his life. So he had heavy migraines for most of his life and, these things were terrible and would knock him out for a day or two almost weekly. And it was, kind of crippling. And so when he dropped gluten, that made a massive difference. I had dropped gluten previously myself, and that made a massive difference to me. I felt like a world of difference after dropping gluten. And I felt like I was sort of high on life, had all sorts of energy, was waking up feeling better. It was really difficult to get off gluten. I had full withdrawals. It might sound ridiculous that I'd suggest it's addictive, but it was for me, absolutely, because getting off gluten was one of the hardest things I've done. So I had that lived experience. And then when I got more sort of ill and more sort of sickness around headaches, etc., later in life, I realized, well, in my head, this has got something to do with nutrition. I don't want to go down the sort of path of taking pain meds for these headaches. That's not going to be solving the actual root problem. None of the doctors really had any suggestions that I thought were reasonable or, going to actually address the underlying problem. So I started changing my diet a lot. Went to whole foods first, I'd say. So cut out processed food. I think that helped a lot. I was very much addicted to carbohydrates because I was exercising a lot and I was eating a hell of a lot of cereal. So then I went more ketogenic to kind of, get off the real carb cycle of the highs and lows on carbs and sugar highs and sugar lows. And that helped a lot. And then, I progressed through GAPS diet and FODMAP and all sorts of things, literally for 3 years, I'd say. And eventually I still had headaches. I was pretty good, but I was down to mainly just meat and a few greens that were, low sort of salicylate, low lectin, low oxalate, etc. But I was pretty restricted. And then I heard about carnivore diet and gave it a try. And literally 3 days after I went straight carnivore, everything changed. My brain felt better.
3 days.
It was 3 days.
Wow.
I felt my
after
brain
3 years, or probably longer than 3 years in total. Amazing.
It was crazy. It was such a distinction between 3 days earlier when I was eating plants to 3 days later. It just felt like my memory was back. I was waking up in the morning feeling like excited and great for the first time probably in my life, to be honest. I had no inflammation, no puffy eyes when I woke up, no headaches. Yeah, and everything got better. Even things I didn't even realize would get better, they did. Like my lower back pain got better. I had tendinopathy of the Achilles. That cleared up and got better. You know, I would have to sort of slow my jogging and jog less frequently. After I went carnivore, I could sprint and do hill sprints every day and still have no problem with my Achilles. So it was like a wild change. And yeah, because it made such a difference to me that I was just such a believer. And then, yeah, everything just got easier. I felt so much healthier. I slept so much better. I woke up feeling better. So it really did change my life. So I'm a bit of a sort of advocate these days for it because it did change so much for me.
And what I love is I could feel it straight away. I'm like, oh, I want a piece of that. And I touched on it earlier. I failed now a number of times at going full carnivore. And I won't bore everyone with the stories for them. But one thing I will definitely say is don't go and drink a bottle of wine or two after 28 days of straight meat. Because I was like paralytic, literally. It's like I was drinking booze for the first time again as a 16-year-old.
That's right.
And my body had completely cleaned up such that it felt that the wine was literally poison.
Yeah.
And it had to get it out. Just by 11 p.m. that night, I was done. The next day, I was sick on the doorstep. It was just awful. Mike, how long ago was it that you implemented carnivore? And what would you say are some of the highlights of having done that since?
I'd say it was about 5 years ago that I went straight carnivore. Could be a little more. It was basically the start of COVID was when I went full carnivore, so I could probably work it out. But what were the main benefits, did you say?
Yeah, what I'm particularly interested in, Mike, is, so as an investor, it's just decision making. You get paid for your decision making. And if you get it wrong, your money's gone. And that's part of being a capitalist. And that's okay. And the whole point is deciding whether something is too risky or actually just what you're after. When you are walking around foggy, you can't get out of bed, like that state you were describing, like how do you make a decision when you're like that? And then perhaps post making the changes you have, like how much clearer is your thought process?
Yeah, it's a great line of thinking because in my mind, what's changed most drastically is taking ultimate responsibility.
Okay.
So
interesting.
When I realized, there was like a realization when I was sick and feeling terrible that there was no one coming to save me. There was no doctor that was going to have the solution, or at least no immediate sort of doctor that I could see when I was living in Melbourne. There was not going to be some sort of, easy fix. I just realized that no one else cared enough. No one else had the experience that I was having. So no one was going to get to the bottom of exactly what was wrong unless it was me taking full responsibility. So I think just generally in life, that was a really good lesson for me because I'd always sort of trusted others and trusted what the experts say and generally lived my life around that. I was not a doctor. I didn't know that much about these sorts of items. I should just trust what people that, are in a white lab coat tell me. But at that moment, I realized that maybe there's some responsibility that I can take and maybe I'm going to be the only person that can actually solve this. And so I went full deep down every single rabbit hole I could on general lifestyle health. I guess you could call it alternative medicine, but it wasn't like I was doing crazy alternative medicine ideas. It was more around, I just knew nutrition was going to be at the core of it because I'd tested things like fasting. And when I fasted, my headaches got better. Wow. So I could feel that the headaches went away, the inflammation went away, the lethargy went away if I was fasted. And so the longer I fasted, the better I felt. So I knew it had something to do with the food. So previous to feeling amazing, I just was completely obsessed with solving this riddle. And I listened to everyone that I could on podcasts. And it's, ever since I've been pretty driven to listen to podcasts to learn, because I was so driven to make a major change in my life, to fix a major problem that was really bringing me down. So I became obsessed with people like Dr. Paul Saladino. I read his book, which was a huge help. And there was other, I guess, doctors before the carnivore doctors that I listened to that helped me a great deal. And then I found sort of Jordan Peterson, Michaela Peterson talking about carnivore on Joe Rogan. I thought it was completely wild and crazy when I first heard it. But I was desperate and I was open to anything. So I was open-minded and curious. And so when it all flicked and it worked, and I felt 1,000 times better, and I'd actually fixed and solved the root cause of the problem, it really sort of shifted my thinking in terms of that trust element that I had for the experts, etc. I don't want to sound like a conspiracy theorist. I know a lot of people in the Bitcoin space really push back on all things, authority or those that have expertise. I think there's a place for expertise and authority, but it was a great learning for me that there's nothing like personal responsibility and actually getting to the bottom of these things yourself. And everyone can do the homework and dive in and probably benefit from it if they actually trust their intuition. And because I went so deep, I found that there was an overarching connection to everything that I learned. At the start, none of it made sense, like putting it all together. It was all different ideas from different doctors, different lifestyle coaches, different individuals that had all sorts of views on nutrition, etc. But when I'd read, 20 books on health and nutrition and lifestyle habits, etc., and I'd listened to 1,000 hours of podcasts, etc., it all made perfect sense that the closer we get to nature, the healthier we get. So that really shifted in my mind around nutrition science. In my mind, is broken, completely broken. There's a scientific nutrition paper on every side of every argument. They'll say that coffee's good for you. They'll say that coffee's bad for you. They'll say that meat is good for you. They'll say meat is bad for you. There's lots of problems with the current way that nutrition science is conducted. Nutrition science is funded. There's a whole lot of incentives there that mean that everyone is confused. And I made sense out of all of it by simply understanding that nature knows best. And if in doubt, choose the more natural approach. It'll probably be healthier for you. And I've found that to be true ever since. So when I'm thinking about whole food versus processed food, whole food makes a hell of a lot more sense. Nature knows best. We ate whole foods for millions of years. We didn't eat processed food up until only recently. Everything that we believe about nutrition, etc., you can basically break it down, in my mind, to what's more natural, and that'll probably be the answer that is going to improve your health the most.
Interesting. And so, if I could kind of draw an analogy, the 1,000 hours of podcasts, the books, you're basically pulling together a thesis, and
100%.
You have an ROI, and the ROI is quite clearly no headaches, get out of bed like a small child, like boom, let's go, totally. Versus being sick. And so the cool thing there is it's like you tried it yourself and it works. So all the bullshit you read before doesn't matter. 100%. Literally none of it matters because you can feel different. And that's a really, what a fascinating journey to have gone through.
The beauty is,
please.
I think the one thing I'd interject there, the beauty is in health, you can experiment on yourself. So it's not as easy with investing, or maybe you could argue that it's similar in investing, is you can sit back and wait and watch the returns.
Or look at your allocation sizing, and if it's something a bit more kind of speculative, then you can make it smaller, for example.
That's right. But the beauty of health is that you can experiment with your own health and you'll probably feel the difference pretty soon. Yeah. So I could literally run experiments, and I ran hundreds of experiments by adapting what I ate and seeing how I felt. And so in my mind, carnivore is the ultimate elimination diet, because most diets that you hear about, that are aimed at curing people's digestive challenges are generally low FODMAP. There's all sorts of, indigestible fibers that cause people issues if they've got certain problems with their microbiome or certain problems with this, that, and the other. The carnivore diet, you can just remove all of that and eat meat, and it gives you a baseline. And generally speaking, I think you can tell me, you'll probably feel a lack of inflammation, like inflammation is removed from the body. You're not, spiking insulin all the time, so that might be a benefit. You're not getting all these indigestible fibers that cause certain people bloating or issues. You're not eating plants, so there's less oxalate, there's a lot less salicylates, there's less lectins. So the plant toxins that we know of in gluten that cause people issues, there's many plant toxins. And so it is an amazing elimination diet. And so you can go back to baseline, start from there, and then add back whole foods to see what is causing you the issue. If you've got bloating, start with carnivore potentially, and then add back, one green or one vegetable or whatever it is, one fruit, ideally probably, each week. And you can experiment for that week. And if you have no problems, then you add another thing in, and you can really set a great baseline.
Yeah, my wife actually tells a story around gluten where she emigrated from Australia to Vietnam and without realizing stopped eating gluten. So there was no pasta, no bread in her diet there. And she came back on holiday to Australia and ate her previous diet and felt like absolute crap.
Yeah.
Like, oh my God, what just happened? And that's probably 10 years ago now. And she started on a whole journey since then. I'll get her on the podcast one day. She can explain all of that. If I may, Mike, it's kind of fun to think about the carnivore advocates are often people that were like buckled up sick, like really sick. And so if I could make another analogy, which I think is true of Bitcoin, is that the product market fit is on the boundaries. It's where things are most fucked up. It's like you literally don't have a money that functions, and therefore Bitcoin makes sense straight away. As a person to adopt carnivore, it's like, I've got to do something about this. And lo and behold, you find this new world that just feels better. And your day improves and your life improves, and you start advocating for it. It's a very natural process to go through. And this is inspiring me to have another go at some point in the future.
Mike, it's going to have different effects for different people, right? So I'm not a believer that everyone needs to be carnivore at all. I think if everyone started off life eating whole foods for their entire life, then they wouldn't have all the multitude of health problems that we've got. So I didn't, get here because I should have been carnivore from birth, I don't believe. I got to ill health because I ate processed food most of my life for 35 years, and I got really sick on the back of it. Because I ate all the processed food that broke down my epithelial wall lining of my gut, I then had challenges with certain plant toxins that then went into my blood and caused inflammation and caused the headaches and caused the migraines and caused my immune system to be up on edge and caused all the downstream effects. Mine weren't really gastro. They were more inflammation based and challenges around the immune system sort of reacting. So I'm not suggesting everyone needs to do carnivore, and that carnivore is the only diet for every human. That doesn't necessarily ring true for me. But I think when you've got sickness and ill health, it is an incredible tool to leverage to then find a baseline and see if by taking out some of those plants that could be causing issues or processed crap that could be causing issues, how do you feel? And if you don't feel much better, like Jake, for you, carnivore, I think, made you feel good. You probably felt, a bit more energy. You probably woke up in the morning feeling a little bit more sprightly, but it didn't change your life. So for you, I don't think it is required, and you're going to feel great on a whole food diet, eating lots of vegetables, lots of fruits, all sorts of things. But for other people that got really sick, like me, like I try to eat other things,
And
I just get a migraine every single time. Like I
really, even now. So when you're
even
like
now,
wandering past the bakery at 5 a.m., it's like, oh, that almond croissant looks fucking
I've
banging.
never ever really had a craving for an almond croissant or anything like it, to be honest. But I do like, sometimes people put pepper on my meat and I'll think, oh, that's okay. And then I'll wake up the next day and, you know, an hour into the day, I've got a migraine.
Oh, wow.
So like something as minuscule as pepper and literally just a few bits of pepper can cause a migraine. I had like quarter of a tequila when I was in Mexico a couple of months ago. My girlfriend and I were in this cool bar in the middle of Mexico City. She was drinking, it was mezcal. It was clean, it was straight, it was, you know, a good mezcal. I thought, should be fine. I'll be fine here. Next day I got a migraine. So I just can't go anywhere else other than straight meat and salt. But I don't think that's the destination for most people. But it's an incredible tool if you've got health issues to sort of start there and then add more.
Well, Mike, well done for all the work. I mean, as Bitcoin advocates as well, proof of work is obviously such a crucial part of figuring this thing out. So, well, of course you've got to do the work for it to be valuable. That makes so much sense. So congrats on getting to this point. And it would be such a horrible place to be, like not being able to get out of bed, etc. in the morning. It'd be horrible. What I want to do is now kind of map back a bit and, you know, because again, we were at the Beechworth Bitcoin Bush Bash. This is like 4 hours north of Melbourne in the middle of nowhere in a town hall talking about Bitcoin in 2022, I think it probably was. And obviously met you, and your day job is very much traditional finance. And it's not uncommon to find people that have worked in that world that are interested in Bitcoin. But what I love is when you've had a foot in both camps. For those that don't know, like, what is it that you do every day? How did you get to that point?
Yeah, I'm in business banking. So that's lending money to businesses and taking security over the business itself, not generally property, but the business, and then providing debt against the security of that business for the benefit of, say, an acquisition or succession funding or working capital requirements, etc. So I very much work in professional services. I spent probably 10 years at the bank. I spent about 10 years largely banking nothing but wealth advisors and accountants. So it was pretty specific, very sort of niche, but, you know, learned a lot about the wealth advice space, probably more so than the accounting space because we typically banked a lot more wealth advisors. And yeah, became sort of well across the challenges in that space and how they can build robust businesses and what we saw as like high risk versus low risk, etc. And it's broadened out a little bit more. So now I look after more of the professional services industries like legal firms, insurance broking firms, insolvency firms. And then we're also doing technology and childcare in our professional services these days.
So what does that actually look like? Let's say I'm a financial advisor. So I've got 10 high net wealth families that I'm looking after, and I would have a functioning business. I'm being paid probably 1% of assets under management each year. And I want to expand my business, whether that's more operations staff or additional advisors, whatever the case might be. And I'm like, I don't really want to sell equity to do this. Maybe I'll leverage. And so I'd come to you with 5 years of performance and show how the business functions, but I want to get a loan. Can I do that? I'm just making this up as I go. I'm assuming this is the process, but
that's exactly
teach me how are the deals structured? And at the end of that, what I really want to understand is like, where does the money come from that you're lending?
That's a fascinating question. And it's worth getting someone from a bank treasury in, because the treasury function of a bank is a whole another world.
Well, I'd love to do that. So if you have any friends that do that,
totally. So you're right. We lend on a multiple of normalized EBITDA generally. So you can think about the business makes a profit. You can add back sort of amortization, depreciation, and then you've got sort of a standard EBITDA. Add back their partner salaries, because some firms pay themselves a lot. Some firms pay themselves nothing. So it normalizes the businesses across, no matter what you're paying yourselves, will add that back. And then we land on a multiple of that normalized EBITDA. And so for a wealth advice business, for argument's sake, we lend up to about 3.75 times normalized EBITDA. So those businesses you'd suggest would be worth, as a valuation, roughly about 6, 7, depending on the size, maybe 8 times normalized EBITDA. We lend them 3.75. So you can think about it as like a loan to value ratio of about 75% against the value of the firm. So similarly, when you want to take out a home loan, you buy $1 million property, the bank will give you an 80% loan to value ratio. So they'll provide you $800,000 against $1 million property. We'll provide a similar sort of loan to value ratio, slightly less because there's more risk when taking on a business, because property generally, as you know, they generally go up in value. Businesses are a bit more volatile, so there's a bit more risk. So we take a slightly lower loan to value ratio, but we calculate that normally on the multiple of their profits effectively.
And what does it cost ballpark to carry that interest? So what interest rates do you get?
It's about 2% above home lending. So obviously that moves up and down depending on where
because it's a bit riskier. Yeah,
central bank is setting interest rates. But at the moment, I think, home loan rates are anywhere between like 5 and 6%, I'd say. And that means business rates are 7 to 8%, somewhere there. Obviously, the larger the business and the lower the risk. So if they're not gearing up the business to that full 75%, then we can provide them a far cheaper rate because it's far less risk to the bank. If it's only a small amount of debt against a very large business, well, then their interest rate's going to be relatively low. If it's a large amount of debt against a, sized business that can, just carry that amount of debt, then it's going to cost them a little bit more. It's called a risk rating. We risk rate all of our businesses, and we generally chase the same sorts of returns for all of our clients. But depending on the risk rating, their interest rate will move up for higher risk and down for lower risk.
And so can a business fix it for 5 years or 10 years, or is it floating every year? Like, how does it?
It's generally variable. So there's only 5-year terms in business lending, generally speaking. So because businesses are more risky and there's more, I guess, factors that could lead to deterioration in, earnings, we don't provide lending over and above 5-year terms, generally speaking. And so I'd say 99.9% are variable rates. There are circumstances, I think, when you can fix, but very rare in business lending.
Cool. And so I'm imagining that an aggressive entrepreneur builds a healthy book of business and is like, I need to find other ways to grow. And they're like, actually, I'm going to take some debt against my equity position, essentially. And that's what they would be doing here. The proceeds of those loans, like, what do they tend to go and do? Is it very much a case of, no, here's the cash, as long as you pay us, then, happy days. And if it goes wrong, you take ownership of the company, or is it immediately sold? Like, how does that work?
Yeah, good question. So generally it's for 2 reasons. There's either younger or sort of smaller equity holders that are buying into the business. So they've worked at this business maybe for 5 or 10 years. They've worked themselves up to like a principal or director sort of level, and the business has offered them equity, and they might have to sort of pay $1 million to buy in to get, say, 10% of the value of the business. And so they're wanting to buy into that business and take 10% equity for themselves. So they'll get 10% of the profit distributions based on that equity ownership. We can fund them in to that $1 million. So we pay the equity holders that are selling down, and we pay them the $1 million, and we draw up a loan of $1 million. And that is in the name of the individual that's buying in, or the family trust, or whatever vehicle that they want to use. So that's one very common case. The second most common, and generally we only really deal with the 2, is for acquisitions. So if a large business is wanting to buy a business that is in the same sort of, service line, it might be a wealth advice business buying another wealth advice business. Their business has got, $10 million of EBIT, and they're buying a business with $1 million of EBIT. They need to pay 6 times EBIT for that business. They want to borrow, say, $6 million to make that acquisition. We can combine the EBIT of the existing business with the acquisition business, and we lend off a combined business based on 1 + 1 of the EBIT effectively.
Cool. I love learning about this stuff. It's really hard when you start figuring out Bitcoin. You learn about sound money and you go, well, that makes way more sense. And in particular, the store of value function of it is so powerful that it's just blowing everything else to smithereens, frankly. And throw on that the very last piece of the puzzle, which often I think gets overlooked, but the self-custody angle, like taking true ownership of your asset is a superpower. And these people with stock and bond portfolios or real estate portfolios or you name it, you don't own that stuff because either you're in some kind of government jurisdiction, they can turn up with their police and kick you off, or actually the exchange stops trading or something can happen. Whereas Bitcoin and self-custody, it's literally, it's yours. They can't take it from you.
Yeah, it's the counterparty risk that...
Correct.
Learning from like Saifedean or reading, a number of books like Layered Money.
Brilliant, isn't it? Nick Bhatia, yeah.
Nick Bhatia. There's so many Bitcoin books that I've read that taught me a lot about counterparty risk and the history of counterparty risk across the centuries. And it's all about centralization and then banks being the counterparty that people were willing to trust. And then look at the GFC. There was too much risk taken. There was counterparty risk everywhere. The banks were all basically insolvent, and the government had to effectively bail out, all the different banks because it would have cascaded through. The counterparty risk from one banking institution would play into the next, would play into the next, would play into the next, because they're all lending to each other effectively, or they're all levered to a certain degree against assets of each other's that would then, unwind if there was major challenges. And so just even learning about, Michael Lewis's books around some of the stories about, financial crises and I'm just sort of fascinated with that world. And learning about Bitcoin where there is no counterparty risk and you can actually take self-custody, it's a whole new concept. It's like we used to have gold and we could hold gold ourselves. And so, to this day, a lot of people still believe in that ability and taking self-ownership of your gold and storing it in your safe or having it in a safety deposit box. And that's because they are genuinely concerned about the counterparty risk with banks or storing their assets centrally in banks, etc. And it might sound crazy, and like for you and I sitting in Australia, we're very lucky. We have a really sound banking system. The government guarantees our deposits up to, I think, $250,000. So the fact that they have to guarantee deposits is funny because it just shows that banks can go under and you can lose all your money. Your money's not actually sitting there necessarily in the deposit account that you left it in. It might be lent out. Everyone thinks that Bitcoin is so risky, but for people that have done the work and, read into it so deeply, you come to a position where you think it's actually the least risky because you don't have to take on that counterparty risk. And where I was going with us in Australia, we're very lucky. Banks are very sound. We've got decent regulations that mean that the banks are well capitalised. We were, far better placed through the GFC than, say, America was. We do have a sound banking system. So generally, if you go out onto the street, no one would ever say banks are risky, or I wouldn't put my dollars in a bank. That would be literally outrageous if anyone said that on the street. But if you go to Argentina and you were a family that had your wealth in US dollars inside an Argentinian bank, well, overnight, the government decreed that US dollar in the US dollar account in Argentinian banks were the property of the government, and the government replaced the US dollars with pesos, and those pesos were hyperinflating to nothing in a really short period of time. Same with Lebanon, with the bank disasters in Lebanon. People were robbing banks to get their own deposits out. So again, they didn't probably realize before that, that problem, that there was a counterparty risk, because their own dollars or their own lira, whatever it is in Lebanon,
pounds, I think,
were in Lebanese banks that then shut the doors and weren't providing any withdrawals. And so they were literally robbing banks to try and get their own money out. So that's where you learn about counterparty risk. And it sounds like crazy talk to the average Australian, but, history suggests that there's been counterparty risk major issues throughout time, and the debasement of, the dollar, or debasement of gold coins over time, etc. It's all there. So if you read the history books, it's a problem as old as time. You just start to see it more and more and more. And it's pretty eye-opening when you realise what sort of challenges certain people are living through in various countries. We're very lucky in Australia, obviously.
I kind of touched on that before, the idea of product market fit being on the fringes. So these economies that exist where either they're pegged to the US dollar and they have no choice on how to control their own money supply, or they have to supply government ID, but no one has government ID to get a bank account. And therefore, 60% of the country doesn't have a bank account. There's all these examples around, and you're right. The Alex Gladstein Check Your Financial Privilege is such an excellent book.
Great book.
Precisely this.
That's why there's so much more Bitcoin adoption in places like Nigeria or Argentina. Because again, like when I was sick, I had to take responsibility, and I had to learn what was wrong with me, and I had to, learn my way to navigate out of the problem. Australians, Americans generally don't have a major problem with debasement. Like you and I would probably argue that they should be looking into it and they should be worrying about debasement. But, in Nigeria they do, or in Lebanon they do, or in Argentina they do. So those people in those countries have learnt the hard way that you have to protect yourself, and holding government tokens, call them whatever you want, pesos, dollars, etc., holding government fiat is a risk. And if the inflation rate is high, you are losing your purchasing power rapidly. So again, we're lucky here, but when you start, I find it really interesting to think that many people can't wrap their head around being in someone else's position outside of their own. So being empathetic to the Argentinian that wants to protect their purchasing power, but doesn't have the ability to hold US dollars because they can only hold pesos, and pesos are going backwards rapidly. A lot of people that you talk to about Bitcoin and that don't see the benefit in it, it's kind of amazing to me that they don't have empathy for individuals that aren't lucky and aren't in stronger financial positions like you and I are in Australia, and they can't see that half the world lives under either authoritarian rule, that there's major censorship issues, or double-digit inflation plus. So, I can't wrap my head around the people that don't have empathy for those individuals. See that something like Bitcoin could actually potentially be a remarkable solve for them.
It is crazy. I must say, just to add to that, the experience I had creating my previous podcast, Bitcoin with Jake, was an incredible, what turned out to be primary research. 80 different people I spoke to all over the world in different places. And, you talk to someone in Kenya, you talk to someone in the Philippines, you talk to someone in Guatemala, you talk to someone who grew up in Caracas, Venezuela. They tell amazing stories. And you can go back and listen to these conversations, anyone out there that's listening now, if you want. And they don't need persuading about Bitcoin. They're just like, hang on. So it works. I can send money, I can receive money, and that money goes up in value over time. Cool. How do I download it? It's like, well, have you got an internet connection? Yes. In fact, you don't even need an internet connection. There's a company called Machankura in Africa that's using SMS to transfer Bitcoin. I mean, it's absolutely wild. And that's such an empowering part of it as well. You think, God, this thing it's so exciting. And quite like yourself with the kind of carnivore advocacy, it just lights me up when I start talking about it. Like, it's just so powerful. But some people can't see it, or some people choose not to. And so be it. We're never going to catch everyone. Mike, this idea of the convergence of a debt-based system and a sound money digital bearer asset like Bitcoin. And when you start talking about like the business banking that you specialize in, or equally when you look at like the real estate market and how like easily accessible leverage is, and how actually, in my view, the prices that are achieved wouldn't be possible without the leverage that's going on. And there's obvious opportunities as investors and entrepreneurs to play that fiat game, right? It's to take debt at a cheaper cost than what you can grow something at. I'm enticed to do that in some ways, because it's like, how do you beat the Bitcoin hurdle rate? If it's going to be give or take 50% a year compounding, like how are you actually going to outpace that? I don't know the answer to this, but someone like yourself who specializes in debt products for businesses, like what happens in a Bitcoin standard environment? Can you still take on debt? And how do you think that might function in the future?
That's like a massive conversation. And I've listened to like people way smarter than myself battle that out. So I think it was Saifedean and Saylor had that discussion. And Saif was coming from a, hyper Bitcoinization world well into the future, where the idea of having debt products in Bitcoin doesn't necessarily make sense, because the Bitcoin will appreciate in purchasing power. And so that's going to really limit the amount of lending in the market, et cetera. And it's going to turn to this entire equity-based system where there's very, very little debt. The debt that there is would be high interest rates, because it's so risky to provide your Bitcoin to someone else, the counterparty risk that you take on. Why would you bother? You may as well just hold the Bitcoin yourself. And then Saylor was coming at it. I think they were basically talking past each other, because they were sort of thinking about two.
Yeah, I listened to that conversation. The Bitcoin nerds out there like ourselves, like the internet blew up.
It was amazing.
Yeah, it's like, I'll listen.
Loved it. It was such a great chat, and both of them I respect. Both of them are very smart. It's funny how long you want to sort of project out, but I think nothing much changes in the medium term. I feel like,
and that's what, like 10 years or so?
I'd say, look, yeah, I think like what they're sort of signaling in the US is that they understand that hoarding as much Bitcoin is going to be great for the US, generally speaking. They've got gold reserves. They're now thinking, well, if Bitcoin's going to be the next gold, and that's going to potentially, risk demonetizing gold, then let's ensure that we've got enough Bitcoin to make sure that in that world and in that event, the US is the most powerful and rich nation on the planet. So it sort of makes sense to me that, people like Lutnick, Commerce Secretary, or Besant, the head of the Treasury, they're thinking that that's just a smart position to take to ensure that any risk to their reserves is mitigated by buying the next potential successor. So I don't know how much they believe that Bitcoin is going to be the successor for gold and going to be, the major reserve asset for all nations on the planet, but it doesn't sort of take too much dollars or too much value to buy a material portion of it for a country like the US, that it is just in case this thesis plays out and what sort of most Bitcoiners think will play out. It's a pretty good, risk adjusted return if they make a sizable, buy. And then if the worst case for the Bitcoiners plays out and Bitcoin goes away, then there's not really anything lost for a nation like America, because what they're talking about buying initially is probably a very, very, very small portion of their gold reserves or portion of their, debt, etc. I think where I see the most change in the world going forward is that when Russia invaded Ukraine, it was a real signal when America took Russia off the SWIFT system and effectively cancelled their $800 billion worth of reserves that were both US treasuries and also European treasuries and other, treasuries as well. So that was a sign to the rest of the world that you need to think about your reserve asset, because if it's US dollar treasuries, then you have a major counterparty risk in the US. And if you do something against the US, well, then you might lose the wealth of your nation overnight, which Russia saw. So that's why they've obviously been buying gold. Listen to Lynn Alden, Luke Groman, etc., all the same sort of Bitcoin podcasters that get around the circuit. I see that playing out where central banks need to actually address this. And then even if they don't want to, they probably are forced to now that the US is addressing it. And that then obviously leads to probably less treasury buying at nation state level and more gold and Bitcoin buying. And I'd say the pace of growth in Bitcoin will be faster than the pace of growth in gold, just because Bitcoin is such a small, percentage of the overall gold market. I think it's 1/10 at the moment. So you'd expect they'd probably buy more Bitcoin versus gold going forward. Where that leads over a longer period of time, I'm thinking 20 to 30, 40, 50 years. I think many nations' currencies will probably hyperinflate, and they'll be forced to either adopt US dollars and or Bitcoin. Maybe it'll be the euro, the US dollar, and Bitcoin as the sort of three options a long time in the future. And by that stage, you'd have to think that most people are realizing that something with a fixed supply is going to hold its value better over time than something with an unlimited supply like the euro or the dollar. Yeah, it sort of scares me what they're talking about in CBDC land with, the European Union. They're rolling out a central bank digital currency. I just don't think the take-up will be there. I think, countries that have tried it hasn't really worked out for them. I think people are sort of wising up to it. I don't think surveillance will win. I think freedom of choice will probably win, and that's sort of how I see it playing out. But I think as far as debt goes, I think there'll always be markets for debt. Generally speaking, those markets will be in the currency of choice in the US dollar, and that's not going away anytime soon, that's for sure. It'd be fascinating and amazing if it did, but I see that being a 50-year thing, that there's still the US dollar that's dominating, and most people around the world today want US dollar stablecoins. They don't want Bitcoin, and that's just the reality, unfortunately. They'll hopefully learn, and more are learning. But yeah, I think they'll still want dollars for trading and transacting, Bitcoin for saving for some time.
So you're not going to be immediately out of a day job, essentially.
That would be amazing, to be honest. If banks were no longer needed and we turned into a Bitcoin standard, then I'd probably be just fine anyway. But I can't see it happening. I think.
Well, I think
even on a gold standard, there was still lending, right? So
completely. I think it's central banks. The role of a central bank is severely questioned as a result of having an independent money supply that you can plug into, like Bitcoin. Commercial banks, where you sit, are still going to be very much needed. Like financial services are very, very important. Mike, I'm aware of the time. Do you have a couple more minutes?
Yeah, fine. Absolutely.
Cool.
We started late.
And so let's just dive down that a little for a second. So that phrase you used, there'll always be markets for debt. And so the point here is just the interest rates can shift, and the term can change. I guess the question is like, if you are sitting on an asset like Bitcoin and that becomes your natural hurdle rate, and let's say it's 50% per year. Okay, well, if you want to borrow my Bitcoin, you're going to have to somehow offset the purchasing power increase that I'm going to potentially miss if I don't get those things back. So presumably the interest rate just blows out to something crazy. And would there even be a market for that? Like, how do you see that functioning?
I can't believe anyone's lending their Bitcoin, to be honest. I really can't wrap my head around it when you've got an asset that's averaging, like, I think they say 60% a year return over the last 5 years, and then it
66%
goes up from there
or something. Yeah,
and it goes up from there if you go back further in time. I think one thing that I'm a believer in, and I'll probably get a bit of stick for this, is that the returns will actually trend down over time. So, the last 3-year return is lower than the last 5 years, which is lower than the last 7, which is lower than the last 10. So I think generally speaking, it will trend down. That said, it's far higher than what people would expect by putting their dollars into the S&P 500. So if it's far higher than that, I don't know why people think it's a good idea to lend their Bitcoins out. I've heard of a lot of people who have, lent their Bitcoins to friends and the friends have lost them, or lent their Bitcoin to, say, borrow against them in obviously all the disasters that happened in the last bear market. I was speaking to a guy at the Bitcoin Alive conference on Saturday that, trusted BlockFi with, a few coins and was wiped out. And so I've never...
so bad right now, isn't it? 24 months later.
Oh, gosh, it would be so devastating. And so I still haven't done that to date. And I've just learned, the rabbit hole that I've been down since the health got just about perfect 5 years ago, I shifted and started down the Bitcoin rabbit hole. The more I sort of look into Bitcoin and the more research I do, I just realize that the smartest people in the space are the Bitcoin maxis that always say don't use leverage. So, my view is that when you've got an asset that's returning such high returns, why would you ever take that additional risk? Just sit back and stack sats and enjoy the returns. In the future, though, if you're talking about a Saifedean sort of world in 50, 100 years that he was sort of arguing with Michael Saylor, you get to a point where the returns are pretty minimal, because if everyone's on a Bitcoin standard and everyone's using Bitcoin to trade on every corner of the planet, then your purchasing power probably only improves or increases with the productivity gains that we're getting from technology and, working together and getting better at making everything that we make, etc. So that means the return on your purchasing power is reduced, and that would mean that then lending becomes a bit more attractive because you can out-earn taking on additional risk, but you can out-earn your purchasing power increases. But look, that's in a world that doesn't exist. So, delving into that too deeply, I'll leave to...
But this is where it gets so wild, doesn't it? The idea that, again, this is just like a classic arbitrage where it's like, okay, my access to dollars is better than your access to dollars, and I can get them for longer, for cheaper, at fixed rates. And so MicroStrategy, for example,
that's right,
their cost of debt is 0.85%.
Yeah.
On billions
they've got
of
zero.
dollars.
They've got zero.
Yeah, well, some of the convertible bonds. Yeah. So I recently was quoted 9 point something% for a private market debt deal with a piece of real estate as collateral.
Yeah.
It's like, okay, so I'm being charged 10% as a retail investor to get hold of dollars. And there are companies out there that can get hold of dollars at like under 1%. So the game is quite clear. It's like accumulate as much Bitcoin as possible, store it correctly, and get as many dollars from other places as you can, which haven't yet figured it out. So it's kind of like a game of musical chairs. At some point, the rest of the market's going to figure out that actually these dollars aren't worth anything. And the people that are getting them are buying stuff that is actually worth something. And in a weird way, that's the game that's been played for a long time already. But you've been buying real estate, or you've been buying Apple stock, or you've been buying classic cars.
That game's been exactly what the wealthy have done
for the last 50 years.
50 years, buy as much property as you can at 10x leverage and sit and wait. And that's been a really good strategy. And so, I think we underestimate how long it's going to take for the average person to realize that there's a better strategy than that. But, that's the beauty of the free market. People will work it out. I, personally don't think about buying property because I just don't think the returns are going to be as great as what I see in buying Bitcoin. You can't lever it 10x, or you don't want to lever Bitcoin 10x, that's for sure. So there is a difference between buying property. You get, instead of the $200,000 that you have in equity, you get an $800,000 loan on $1 million property. And so a small percentage increase in the property value actually is a large percentage when compared to the $200,000 of equity.
Yeah, your return on capital employed can look really attractive.
That's right. So it's better because you've got leverage, but I just think
still liquidity issues and maintenance and yield and just all the crap that goes with being a real estate investor
that I cannot be bothered with. And I had an investment property that I ended up selling because I just could not be bothered with it, and it did not return anywhere near what Bitcoin is returning.
Or what Bitcoin will, that's for sure, yeah.
For sure.
So, Mike, my last question to you then is, and you touched on it briefly, so did carnivore come before Bitcoin? What was it that caught your attention about Bitcoin, and when did you first start looking into it?
Yeah, so carnivore came first. I was very much down the health rabbit hole, and that was kind of my main focus because I had a real problem that I had to fix. And so that sort of took all of my attention outside of work. And then Bitcoin came about through carnivore, to be honest. So some of my carnivore doctors that I was listening to started talking about Bitcoin.
No way.
And that was sort of fascinating to me because I was like, what is this Bitcoin thing? This was in the last full bull run of 2021, I think, 2020, 2021. And so there was a lot more people starting to talk about it. And there was, another friend at work that had sort of mentioned it to me. So I reached out to him, and then I read Saifedean's book sort of immediately. And basically from the back end of reading that book, I was like, wow, this is important and big, and I'm hooked. And I started sort of getting excited about it then. But it did take some time to learn the difference between all the shit coins and Bitcoin. There was a period where I was like, these hardcore maxis, why are they so strong on Bitcoin only? Surely if crypto is going to be, a large part of the future, then surely there's going to be other interesting projects. And I was a bit confused, I guess, for the first maybe 3 to 6 months. But the more research I did, the more books I read. I read Jeff Booth's book. I've got half them here, Lynn Alden's book. Mm. I've just bought the Andrew Bailey book as well. Mm. So there's just, the more reading I did, the more podcasts I listened to, I then understood the difference. And it does take time because it's a big rabbit hole and it's deep and complex. I just became 100% solely focused on Bitcoin. And I'd bought some ETH to that point, and I sold it all, which is the best thing I've ever done because ETH has been absolutely atrocious versus Bitcoin. So, 100% Bitcoin now. I guess the journey in carnivore, I had to take a realization that I need to take responsibility and I need to do the research to work out how I improve my health. And I found out that the authorities in nutrition science and the authorities, say doctors, etc., really didn't know anything about nutrition. So the doctors didn't study nutrition. It's not their fault. They just weren't taught anything about nutrition. So that was a real realization that, wow, I think nutrition is at the base of many health issues that we face today. And 95% of doctors have literally zero training on it. None. And so they've got busy lives and busy families, and they're making good money doing what it is that they do. And there's many good things that they do, but they do not understand nutrition. And I thought that they did. I learnt that maybe you shouldn't trust some of these authorities for, full responsibility of your health, something that is as important as your health. And it was the best thing that ever happened to me getting sick because I actually did the work. I came out the other side 10 times healthier than I've ever been, and I feel better than I've ever felt. So I didn't only remove my headaches, but I literally got better health than I've ever had, and I wake up feeling better every day than I ever have in my life. So that really sort of flicked a switch in my head to say, why are they telling me that meat's bad for me? And when all I do is eat meat, I feel better and better and better. And so I then was looking into the incentives behind why are they telling us that, meat's bad for us when it's actually really good for us. And then you see that it's largely driven by money. So the incentives behind nutrition science is largely driven by processed food companies wanting to sell their boxed stuff, and they can make higher margins out of boxed things than they can make out of whole food things. And so there is all this apparatus around confusing people or suggesting that, the food pyramid is what you should follow. The bottom of the food pyramid was all processed food, largely. Like 90% of it, I think, was processed grains. And when I removed processed grains from my diet, I felt 1,000 times better. So it just showed me that it's an incentive problem. The incentive is for the food companies to pay the nutrition scientists to release studies that suggest meat bad, processed food good. And so I was like, holy hell, how do we have a situation where the government is backing the same narrative that these food companies are backing, and it's making people sick? And I was like blown away. And it just really sort of set me on a path of like looking at incentives and finding that the root of most evil in the world is generally around misaligned incentives, and that comes back to money. And so the money being the root of all the incentives that drive decisions at business levels, and why these large food companies have got so large, and why they, there's all sorts of malincentive in the nutrition science, and it all came back to money. So I then was like, well, hang on, why don't we look at the money? And started going down this sort of money path. And there was Austrian economists that were talking about the root of all evils being central banking, and central banking leads to, misincentives with business, etc. And so that all played very nicely into the kind of world that I'd stumbled into, seeing that there was maybe a problem with incentives, there was a problem with the money. Look at the money deeper. Why do we have money that they can print as much as they like and sort of debase our hard-earned dollars? And that's sort of, obviously right up in the alley of Bitcoin, and why a fixed money makes so much sense. And then that can hopefully realign incentives better, so there's less challenges downstream from it. But yeah, that was a long way of saying carnivore led to Bitcoin effectively, because I realized that the root of the problem was to do with money.
Awesome. Well, thank you for sharing all of that. It's quite crazy how these little dominoes start falling as it all just starts to make a bit more sense, doesn't it? You're like, hang on, no, I need to start questioning that. I need to start questioning that. And you dig a little deeper. I've often said that, I went to business school, ended up working as a broker in international shipping market. And you're just like, you're running after make money. But you don't ever stop and go, well, hang on, what is money? And I think you've just described exactly the same thing, right? You're literally in business banking and you're doing debt deals every single day.
No, but actually, no one in finance, and I, and including myself in this, I never thought about the question, what is money, until I read a Bitcoin book. Wow. So that led me to the path of asking those questions, and then listening to, say, Robert Breedlove's What is Money show, and then hearing Saylor talk through the history of, civilization that led up to the gold standard, etc. That is all learnt externally. It's the same with, if you go and see a great functional medical doctor, they might talk to you about your lifestyle. Jake, how's your eating habits? You might be like, well, I eat, processed junk all day. I eat McDonald's every night for dinner. They might say, well, we think that whole foods are probably healthier for you. That might be a better path to take. How are you sort of getting outside and being in nature? And you're like, no, I spend all my days under fluorescent lights at the office. They might be saying, okay, well, maybe you should get outside a bit more. Maybe think about, even looking at, say, meditation for, you've got stress, high stress levels, etc. Those functional medical doctors that have actually done the work to understand nutrition plays a part, lifestyle plays a part, time in nature plays a part. Maybe things like meditation might be good for stress levels, even things like saunas, ice baths, etc. They did not learn any of that at medical school, not one bit. they've learnt that from probably getting sick themselves and then having to find their own solution to find health. So all of the doctors that I follow and respect, without exception, I think, had health problems themselves, or they had health problems in their family. So it was someone that they loved and cared about that got really unwell, and they had to go to the nth degree to do the research, to do the proof of work, to understand how they could heal them. Because when they were told by another doctor they just need to take a pill for the rest of their life, they asked the question, hang on, does that make sense? Do I think that that's the answer here? Why don't I do some research? And you'll find that all the functional medical doctors, all the best doctors, in my view, have been sick themselves, and they've gone through, or they've had someone that they love get really sick, and they've actually had to learn it themselves. And it's the same thing around banking and finance and learning about sound money. No one in finance is thinking about sound money because they're doing just fine. They're earning good salaries, and they're, businesses are benefiting from the fractional reserve banking system, etc. And they are the top of their class out of whatever MBA school they did, or whatever finance degree that they've done. And they've been having a successful career, and everything is good. And it makes perfect sense that we have central banks to bail us out when there's a problem. That makes perfect sense to the average person when you say central banks are there to bail out the banks if there's any catastrophic problems. That sounds good. It sounds warm and fuzzy, and it sounds nice, and it sounds like, they're there to protect us. And so unless you happen to stumble down this rabbit hole, you're just not going to be asking those questions. So, I think, like Jesse Myers says, the yuppie elite will be the last that adopt Bitcoin because they don't have to.
Well, Mike, we're going to wrap it up here. So I think my lesson from today is just this idea of ultimate responsibility, and doing that in multiple areas of your life actually starts to make things like radically better. If anyone wants to reach out and get in touch with you, what would be the best way?
Good question. I would say
it could just be through me, if that's what you want to say, or if you want to put any socials. Or
let's do that now, and then I can talk you through anything else. But
sure,
I think that's probably safer. Reach out to Jake. You'll have a few. Hopefully, there's a few people that want to.
And I can put you in touch. Well, Mike, thank you so much for your time today, mate.
Jake, that was a pleasure. Thanks so much.